All right, let's go over today's trades. So here we are. Here we are on. Let me get ES up. They were both on ES. Only because what I saw in the morning was NQ just drew higher, so there was a slight SMT. It didn't really matter on which index you took the trades, but there's a lot to learn here. So trade one, really what I was looking for, if you can see on the higher time frame here, we had this 1 hour fair value gap. This is the 15-minute time frame, and I was looking to draw lower. We had these equal lows down here. We had some liquidity down here, and overall, we had just taken out consequent encroachment of the daily time frame yesterday. And then if you can see overnight, this is Asia, heavy sell-off into London. So I was just seeing the bears had more strength. So really, I was leaning neutral, slightly more bearish. If you look at market open here, this is where conditions. Look at these conditions. Look at these wicks. This is very tough price action. And I should have read this sooner. As this was going on, as I had a bearish bias, I said to myself, all right, we had this 5-minute fair value gap here, and we also had a 5-minute here. This is a low quality fair value gap. Why? Because it has been mitigated. So it automatically goes from an A fair value gap because it's been mitigated. Even though we saw strong displacement through it, it goes to a B minus right away. And after trading today, I come up with a new rule for myself that if I take a fair value gap that's been mitigated as my trade for the day, it's an automatic half-hour trade. Just because statistically, I've just seen it too many times where you're just not getting the same level of conviction with that fair value gap as you get with a clean, unmitigated fair value gap. So I entered the trade here. Where is it here? And my stop loss, I just put it above. Really, typically it's the candle that created the fair value gap, this candle here. The wick of that, I put it like a little higher just because we had some historical liquidity points here and highs. So I put it a little bit higher, and we'll see the trade played. So this looks great so far. And bang, I got stopped out. At this point, I had kind of set and forget my trade. So I was out of my apartment. So that was a loss. And it's a loss I should have been happy taking. Because this is, we talk about low probability conditions. Do you see the lack of follow through there? This is where accounts get blown. And to be honest with you, I'm lucky my account wasn't blown today with how I performed. So we'll get rid of these. So as I said, I was away from the apartment. I came back home just to log my trade. When I came back home, I saw, I got back home where I got back home and I saw this. I literally sat down at my computer. I saw my original trade idea and draw were still alive. And what time is this? This is 11:25. So first off, it's one trade and done for the day. I'd already taken my one trade. And two is I don't trade after 11:11. And that's something it's a big takeaway from today is I'm going to do my reviews as you're seeing now later in the afternoon, because it's very hard for me, even this long into trading, when I see my original trade, trade for the day, when I see it set up so clean like this, I just find it very hard to have the discipline not to press the sell button and or enter the trade. So I did enter the trade here, and two left. First off, if I was to enter this trade, I always put my stop at either the candle extreme, which is this candle, or the wick of the candle that formed it. So my stop should have been here. It was not. It was here. And I did put in lighter size, but I do have a daily loss limit on my accounts. So I entered with too much size, meaning if we did draw back up into this into this area towards my stop loss. I didn't have enough buffer in my account. I was going to get stopped. Like my stop was realistically like here, because I just didn't have the drawdown amount to cover it. And that, like, the reason these are just rookie mistakes, and the reason they're made is because I knew I was doing the wrong thing entering the trade. So if I'm going to do one thing wrong, look at all these little rules I'm breaking all over the place. You know, it's totally outside of my normal way of operation. And we'll see how this played out. So on this specific trade, we came up, and at this point, my account didn't cover the buffer. I didn't have enough trailing drawdown on my account, so I actually got stopped out here, even though my stop was not hit. My stop was above this fair value gap. So my stop wasn't hit, but it closed me out. I deserved it. Let's see how this played. So bang. And what did I do? I went onto another account of mine. I entered this trade, and we'll see how this one played out. So at this point in this trade, I went to, I entered again here. This is where I re-entered. And with this trade, once we got down here, I put my stop to break even. We whipped my stop, so I was out for break even, and I went to target. So we'll see how the rest of the day played out. So I like bigger picture. Let's just kind of get to. Yes, that's like end of day is here. So was my drawn liquidity correct? Yes. Was my TP1 target correct? Yes. Yet I came out of the day, thankfully, at a minus 1.5 R. It could have been a lot worse, but cognitively, my mental capital got heavily drained. You know, this is all very, very unavoidable stuff, and these are conditions. There's going to be there's always another trade, and when you're seeing price, this is what it's nightmare fuel. That you don't want to be trading stuff like this. There's enough days of great price action to trade off of. Why bother getting caught up on this crap? You know, it was pretty freaking obvious. Like when I entered this first initial trade, like who knows? It's seek and destroy. Look, like every bit of conviction we see to the downsides gets bought back up. We are just going back, whipsawing back and forth. This is where your stops are gonna get run. You know, even with this trade here, my break even got hit. Why? Because we're continuing, like what we see in the AM, or what we see in that early 9:30 to say 10:15, 10:30, often predicts how the rest of the day is gonna go. So when you see some of that stuff, just turn off your screen and walk away, which I did today, but I lacked the discipline when I came back in here, and I re-entered, and the trade I entered would have ended up being a winner, but like those profits are meaningless because they're outside of my system, you know. And if I continue to re-enter trades so my daily loss limits hit, good luck holding on to your accounts. It's only a matter, it's just a ticking time clock or ticking time bomb until your accounts are gone. So yeah, like very disappointed today. Like while it was a losing day, it could have been a lot worse. A lot of lessons taken from today. I'm obviously not strategy hopping, but in terms of my trade management and just my trade management more than anything, and how I look at the market, or actually don't look at the market once a trade is entered. I'm just gonna have to be a little bit more disciplined with that going forward. So with every loss, there's a lesson. I got some lessons from today, like pain is the greatest teacher. So anytime I do feel a little like butthurt about a day like this, I just get to journaling, try find the errors in the system, at least get some good out of when things go wrong, and become stronger from it, and don't relapse and do the whole thing again, trying to get back dollars that are already far lost.